Hello everyone. I'm Parth, not Shek. I'm with CoinDCX Ventures. So that is the corporate VC arm for CoinDCX. We basically deploy our own balance sheet money into early stage founders. Before this, my journey, I also started the venture arm for CoinSwitch, the other big exchange in India, and previously was with JP Morgan's blockchain team as well. I'll pass it over to Amit to give us brief introduction about Borderless and your work.
Sure. Yeah. So Parth is a good friend. We have been on several panels together, and I did a postcast with Shek as well, actually, earlier. So yeah, very quick. I'll keep it short given the time. So I'm a partner with Borderless. Was the first hire. Been with them for I think 6 years now. Founders are getting tired of me. Before that, I was with another VC fund. Been in investment space for over a decade now, and prior to that, been in Web3 in India since 2016. Prior to that, I was in the US doing investments out of a pension fund before I came back. So quickly about Borderless, we have both a VC and a liquid arm. Over 350 companies in the portfolio. We have multiple thematic funds. The three active ones right now. One is focused on interoperability cross-chain, working very closely with two of the sponsors here, Wormhole and Solana, both of which are LPs in the fund, along with other L1s and other crypto institutions as LPs. The other is focused on deepen. So we are very deep in the deepen space. Actually, very fortunate to have some portfolio companies like Dabba, which just presented before me. And then we have recently launched and started deploying from slightly agnostic capital, means not related to any particular chain, and but which is doing slightly growth stages as well. We do both equity tokens, understand the space very well. On the liquid side, it's basically liquid investments, tokens which are already live, as well as regulating market exposure or hedging market exposure through options on Bitcoins. And it's very opportunistic. Like from there, we have recently participated in over 16 digital asset treasuries, DST, including Helios, the Solana one with Summer and Pantera. So, yeah.
I think one thing just to start off the discussion, Amit, because you've invested in the Web 2 space also, like how do you think investing in Web 2 is different to Web 3?
Sure. Yeah, I'll give a quick take, and then would love to hear from you as well on the corporate side. On the Web3 side, the main difference is, like in my time in Web2 versus Web3, I saw liquidity in Web3 was much faster. So startups are able to bootstrap. Like in Web2, startups would raise money, deploy that money for marketing, have like a marketing budget and all that. In Web3, all of that is taken care of using airdrops, incentivization mechanisms and so on. So one, liquidity is much faster. Two, you can actually control or try to control, influence your token price through mechanisms like buybacks and burns, buybacks and creating LP pools. And third is that it is very community driven. At the core, again, now we can debate entire like day on how decentralized things are, but the whole difference, the idea is that Web3 is supposed to be the fundraise and the entire thing is supposed to be very decentralized. So those are the three key tenets, and I think which is based.
If I can just add to that, I think this was this fund manager called Jeff Dorman at Arca who put it best. Like tokens are the most innovative way to have participative capital in your project. Think of it as like shares, but like much more liquid right from the day go, and you can also help bootstrap liquidity. So I think that's why Web3 investing is very different. We also see this in different parts of the market cycle. So during the bear markets, nobody wants to do tokens. So most of the raises happen with an equity and a token warrant sort of a structure. Whereas now I think we are sort of in the middle of a decent bull run, and we see a lot more SAFTs coming out, so which are simple agreements for future tokens, and lots of projects are raising money via tokens right now.
And one question I had for you, Path, like I think, see, we are a pure play VC. I think would love to hear. I think it'll help. I think most of the folks are founders here, so for them also it will help. Getting an angle from a corporate side. Like for example, the CoinSwitch investment arm, CoinDCX. How do you guys look at? How is it different from a pure play VC?
So I think this was born out of necessity. Like I think there are no quote unquote Web3 funds based out of India. So, but the ecosystem is very strong. We see that, like, there are so many developers. So I think both the exchanges, what they thought was that, we can start seeding in some of these early stage companies. And again, like, they don't do very big checks. We do like 50, 100K sort of checks. But what we try to do is create more visibility for these projects. So as you know, I share deals with you also. So anybody who's building in the room and has an interesting project, I'll try to create like a deal list and share it with global VCs, so that there is some more eyeballs on those projects and they can probably get picked up by the bigger funds. And I think that's the key sort of goal for these corporate VC arms. But in general, again, like, this is strategic capital. So if we see some project that is building something that could be adjacent to our business or that can complement our business, we would like to bet on that. And hopefully in the future, when they grow, scale, we can get some of the benefits from that investment as part of our product offering.
And does it I think one question which like a lot of the companies have is getting a check from the investment arm. Does it help on the listing side?
No comments there. But like, again, like, listings is a very different process. I do believe, like, it always makes sense to have like an exchange partner, not just because of the listing, but also like distribution. Like, specifically for CoinDCX, we have like a Web3 wallet within the main centralized exchange arm, so we can actually give you a lot of distribution benefits because of the scale at which we operate.
Awesome. Yeah, and I think
I just had, like, probably because there is very less time. If you want to touch on some particular topics or trends that are like key for VC investors right now, maybe the builders can sort of concentrate on that.
I think what might be most helpful for I like to do it whenever there is like a talk on maybe what are some of the mistakes that we have seen when they are designing funding rounds. I'll start and maybe feel free to chime in. I mean, I think across both of us we have seen quite a few mistakes kind of people have done. So I would say one thing what we are learning now. So from our fund one, we are now in a position where we are in harvesting mode, and we are so everybody starts with a full energy burst, right? And then things happen along the way. And what happens, I think it's very interesting to see what happens 6 years, 7 years down the line, and that is what we are seeing right now. So what is very interesting is actually when people are starting, they feel that okay, I have to worry about the competition, I have to worry about this thing outside, I have to worry about the market. Interestingly, what we are seeing is the biggest challenge. I think there is like a African saying also, something like that, but your biggest enemy is not outside but within. So most of the challenges that we are seeing, for example in our portfolio, is actually companies, the biggest challenge is founder conflict, between co-founders, or governance issues where the CFO did some shady things with the funds rates. So that is something to be and it is very good if you solve it at the genesis block itself, right when you are starting. The second thing is always try to have on the tokenomic side some very basic things, again because this more geared towards raising via token. So try to have more than 50% of the tokens. Ideal is 51%, which is with the community, which is across ecosystem incentives, across airdrops, everything.
On that, I can probably like add one point. Like, do not rush to like sort of launch your token. It is sort of like falling in love or getting married. Like, it happens like once, like in your life, like, hopefully. So in your project's life cycle, like, make sure that the token timing is correct, because once the community gets burnt and like the token price falls or something, it's very difficult to sort of to get them back. Another like take, which is I think which is very hot right now, like people are doing buybacks of the fees that they generate. Think of this as similar to dividends in the traditional like equity sort of thing, but not all companies give dividends. Like, a lot of companies reinvest that capital for the project to do more innovation or build better products. So just don't like look at tokenomics as a way for fee burning and pumping the token price. I think these are some of the like key things that you need to look out while thinking about tokenomics.
Yeah. And I think we have like few seconds left. Other thing I would say is always keep the team vesting higher than the investor vesting. That is very critical. And communicate. Like shit happens, but some of the best projects we have, they have over communicate the bad things. Even if you under communicate good things, that is fine. But I think communication is critical with investors, with community. I think that's all the time we have. So.
Yeah, limited time, but like we'll be around. So if you have any questions, please feel free to ask us. Thank you.
Thanks, guys.